Okay. So I don't know if you've had a chance yet at all to log into Xero and have a look around, or I know you did the bank accounts, but you haven't really done anything else. Okay. Oh, you did these data entry ones. Okay. So test invoice. Okay, cool. We'll have a look at that. So with my role, what I usually do for clients end to end is I do all the reconciliation, data entry, all that kind of stuff, to the end point of then being able to reconcile to do the final BAS. Um, did you want to do the data entry yourself for like what you've done here for the business expenses and whatnot? Yeah, so honestly, I would prefer to. So specifically in this example here, if I was to trust you doing the data entry, um, this is incorrectly entered because with insurance, there's a GST and GST free component, and this is claimed the whole part of GST. So I would inadvertently, if I wasn't checking it, I'd miss that, and I'd be lodging it as the whole part GST. Whereas when I go through and do it, yeah. So when you see and I'll the Brian Cole one, that's fine. Like I know Brian's registered for GST, but the main reason I do it is because I will go through and there'll be a lot of supplies that aren't common. So we'll require an invoice. So I'll ask you for an invoice for whatever it may be. But once we've kind of established that that supplier is a genuine supplier, and that they're registered for GST, I'll be able to then just base it off that one invoice and then probably not pester you for multiple more invoices again. Um, the reason that people hire me is because when it comes to ever, hopefully it never does, it's a very small chance, an audit from the ATO, you kind of want to be audit proofed. And so as I'm doing the data entry throughout, I'm making sure that you are audit proof. There's no failings that will ever happen when it comes to an audit. So for now, we can leave the reconciliation. If it comes to a point you want to drop your bookkeeping costs, I'll be happy to teach you what to do. It is very simple. It's just more the volume of transactions that come through. It may be a little, maybe a lot. But that's something we can revisit down the track. Is that all right? Cool. All right. So yeah, obviously for invoice goes invoice sales and then invoices, and I've done this draft one. So Craig Finn. Is that the person that you're... That's fine. Is that the person that you're dealing with directly for... Okay. So usually with companies like that, they may require you to invoice it to the company and attention it to them. Is that what they're wanting? Okay, sure. Alright, we'll leave this draft for now, actually. I'll do a new draft. And you can kind of see what I'll do. Oh, no, that's fine. No, that's fine. No worries at all. So first, actually, we might set up the invoice template. Let's get your banking details on here. So you put your logo in, which is great. And so, what's that other stupid thing? So put your BSB and account number details, which I've got to grab. Alright. Account name. So is the account name for the business in Tetris or Karyn Gardner? I'll let you double check that first, and I'll just put the rest of the details in. we have, is it, so it's Karyn, the account name's Karyn trading as Tetris. Oh, okay, no, that's fine. It's alright, take your time. Yeah, of course. Yes. Yeah. Yep. Yep. And I'll show you how to manage and do that. Because your invoicing will be monthly, correct? Yep. Okay, that's fine. Mm. Okay, I'll just put Karyn Gardner. Okay, no, so it'd still be Karyn Gardner because that's what pops up first. Okay, that's fine. What was it trading as Tetris? Oh, that is a mouthful. How do I spell that? Sorry. Yep. Yep. Alright, then did you want to have like on the invoice that you send to them, like your phone number or like your email or anything like that? tetrisgeonet.com.au. Yep. Does that look right? You can see that. Just this one here. Alright, cool. So we'll save that. And we'll go preview. Oh, I got rid of that. So we'll do it in this draft. Okay. So we'll go back to here now. So what's the company that you're going to be contracting to? Okay. So when you create a contact for someone, you'll just have to put in what the generic name is for them, but then you can put in further details. So here's like the base kind of details you can do, and then you can put like the email in of who it's to. So actually, yeah, so you can also then click on the invoice or click on the contact name, and then you can go and click this hyperlink that will open a new tab, and then you can put in the further details. So as that's why I was asking before if there's a primary contact that you have. So was it Craig Finn? Okay, do you have Craig's email? Yeah. It was an MRL? Yeah, okay, cool. So then, yeah, this is, for example, if you're doing it for another new contact, this is how you do that. And we'll save and close. And then we can go back to the invoice here and keep this going. So with the issue date is the date that you're sending it out, or the date that you want it to be recorded as. So say, for example, November's finished and you're doing your November invoicing, you'd want to do it, say you're doing it in December, you wouldn't want to put it as the 5th of December, because the recorded date for them to put in as that income for will be in December, but the work's actually in November. So you'd usually do, like for what I do for my invoices, even if I'm doing it a month later, I do it as the 30th of November, or the date ending of that month of work that I completed. And then the due date could be from whenever you're invoicing it from. It could be 7 days from then, 14 days from then. So say you're doing it on the 5th, and you, what's your terms with them actually, do you know? Oh, really? Okay. So, yeah, so say from the 30th, you do 21 days. Really? That's a big ask. Yeah. Okay, sure. Okay. That's fine though. So then, yeah, like to work out 21 days, you obviously know, you just look at the calendar here and you can just do 3 days and click it, and that's done. Now, this invoice number, this will automatically regenerate. So as you do more invoices, that number will go up. What we can do, so it looks a little bit more professional, we can actually start from a higher number. So we can pick any number that you want. It could be 458 or whatever, to start from a high number. Just looks better. So we'll change that after, but for now we'll leave it as invoice 2. And then the reference here, you put in your PO number for whatever it is. So I'll just make one up. 2246932. Alright. And then description, is there anything that you would want to put in specifically? This is mainly for like the work that you've done. So you could either put, contracting days and how many days you've done. And then say you did, I don't know, in the month you did 18 days. I think you said your day rate was 2,000 a day. That's lovely. Is that plus GST? Even better. So this amount here will always be set as tax exclusive. Never change that, because what will happen is the amount that you put in this box here, if you change that to tax inclusive, you'll see in the bottom right hand corner where the total is, it will shift and it will start taking the GST out of your gross day rate amount. So this will always be as exclusive as a default, but just make sure you kind of double check it before you send it out. And then that's fantastic. Yeah. So once you've set that 2100 at the quantity, which you're doing is, let's say 18 days, you leave that sales account. So this is what's going to record on the back end in Xero for us to look at a profit and loss, to see how much income you made, what your expenses are, and what your gross profit is, which is what your tax is going to be calculated on. And we'll get to that. We'll look at a demo company later and we'll go through that. GST on income always, never anything otherwise, unless you do any kind of work outside of Australia, which I don't think there will be for you at any point. Okay. Well, for now, we won't go through it, but if it ever comes to you doing international work, let me know and we'll go through something so I can explain why and how that works. So then, okay. Yeah. Okay, that's great. All right, so then for that, you say your flights to Perth were 2,000, and you get to charge an extra 10%, so it'd be 2,200. Oh, yep. Okay. All right. So just as like one line. Okay. All right. We can do something for that. So let me have a look. Oh, I'll look for a random document. No, no, no. We can do that. We can definitely do that here. I just need to find a document that isn't part of a client's. What's this? This. Oh yeah, this one. This one's fine. Okay. So let's say you do, I don't know, works completed, whatever you want to do. Then see attach spreadsheet or PDF or detailed list, and you just put 1 at 40,000 or 468, whatever random number it is, right? From the spreadsheet that you've calculated with all your detail expenses, right? You can drop a PDF, spreadsheet, whatever, into here, and it will attach as a file in here, and you click include it with the online invoice, so that when you send it to Craig, he will open this Xero link, and he will be able to see the invoice, print that off, see this attachment, and also print that off, or pass the link on to his accounts team, and they'll be able to get all this data as well. So we'll leave this for now, just because it's a test, and we'll put the test. Then that's it. Then you're done. So then you click approve an email. It'll give you a brief setup of, hi Craig, here's the invoice, blah blah blah. Very generic. We're going to change that email for now to my email, so we can pop that open and see what it looks like. And by the way, we can change this template here if you want to, or you can just copy the link for the invoice and put it in your email, whatever. But this is how I do it. And then just always make sure you click attach files to invoice email, like that, and send email. So then they'll come along to me here. Alright, then I click view. So he'll have this template here, which is from Xero. If he scrolls to the bottom, he'll have the PDF invoice of your bill. It won't have the attachment in here, but it'll be in an external tab. So this is just the other document that I had. And it's got your BSB and account number. Oh, sorry. It's got your ABN. It's got all of your details, including your email. Perfectly ready for them. Then if he wants to, he can also click on the link, and it will look like this. You'll see a document. You can still print it, download it, and look at the attached document that you have as well. So cool. Alright, so now if you ever do an invoice on accident, so say you've done this invoice and you've realized that you've doubled up or whatever, they'll be mainly sitting in here, which is awaiting payment because there hasn't been a payment put to it yet. You just click into the invoice, and to do any kind of editing or deletion, it's the 3 little dots in the top right. And so you could edit this invoice if you need to amend something, if you've incorrectly done something, or void, because it doesn't fully delete it, it almost archives it, so as a record if we ever need to go back to see variations that we have deleted. But you just click void, and then it disappears, and that doesn't show up in the profit and loss, doesn't show up in awaiting payment, nothing. That's pretty much the base crux of invoicing. There's nothing extra or special that you need to do. For example, the mainly last thing would be how to record the payment. So like I'll finish this draft invoice you're doing before. So I'm just going to phone call. And instead of approving and emailing, you can click just approve. Now you'll see there's 2 options here actually. There's save and close, and then there's approve. Save and add another or submit for approval, that will put it in its draft form. And so if you send it as a draft, it will actually send it as like a quote or like a draft invoice, and it might be a bit confusing to them. So once you've completed the invoice, if you're sure that you're ready to send it, you click approve or approve an email. So we've clicked approve. Now say they've paid it straight away. You'd go back to your invoices section in the awaiting payment. You'd click on. No. I didn't. I just approved it. I didn't approve an email. Yeah. So yeah, another thing. If you're ever not sure if you've done something incorrectly, a great thing with Xero, it shows you history and notes. So it shows what time you created it, when I edited it, when I finally approved it, and it shows that the invoice is unsent. But it would show, like on the other one that we did before, that the invoice was emailed, and it'll show you who it was emailed to. So there's always like a trail history of every action that you do. So say now that they've paid it straight away, you would go now to add payment for today, select the bank account they paid it from, which would be the business account, and the reference you just put in EFT for electronic funds transfer, add. That payment then gets recorded, it gets wiped away through your waiting payment. Then to see it later as a future reference, you can go to all invoices and you'll see it here, showed up here. Now say you accidentally, for whatever reason, put the payment in wrong date or whatever, you'd go back into that invoice, click on the hyperlinked blue payment down here, remove that now, and if we go back to, it's taking us back to the invoice. Now it says it's unpaid, and then we can delete that invoice. And that's it. Yep. And then it will come to me, and I'll have a list of payments, and then I will reconcile them to the bank account in Xero. So you don't have to touch anything to do with the bank accounts here. Yeah, the business online saver, yeah. Yeah. You can. Superannuation is not a tricky one. It's more so that because you're a sole trader, we can't pay you a wage. So yeah, do you want to take a second to go for it? I'll take one too. So because you're a sole trader, you can't actually take a wage. As a sole trader, you take the profits from the business at the end of the year as a wage. So with that, then we dictate how much profit there is, which in turn how much super we can put away at a maximum for the sole tradership not to make a loss. So say or too much or too less income for you to then get a business loan or car financing or anything else you want to do. The higher we can have that profit for future reference, the better. So I would suggest for the meantime to maybe chat with Jason about that and ask him what he thinks. Typically, I know from experience with working with Jason that if he did want to, he would let you know probably around the April, May, because it's just before end of financial year, gives us enough time to actually make the payment and work out a sum, especially because we'll have enough data of how much income that you've made to then put away. Because you'd hate to be doing, minus the GST, 12% of that net amount then. But then you've also got tax, your expenses on top of that, which diminishes how much that income actually is. And then you've overpaid super for one, what you needed to, and two, to reduce your profit by enough where instead of it being, 100,000, it's now 80,000 or 60,000 or whatever we decide to do with how much super we put away. And then at that time you want to get a company car or some kind of financing for something else. We kind of leave that avenue open. I think for you specifically as a sole trader, you can only deposit a certain amount per year anyway, like a contribution towards your super, if it's not through a wage. So I think it's only 21 or 25,000 that you can maximum contribute. If it comes to this financial year finishing and there's a lot of income to disperse, we may also look at then the option of switching over to a trust. So I think you mentioned before you have a family. You have kids. How many kids do you have? They live at home. What are their ages? Okay. And then your partner, do they work? Full time? Okay. Okay, so it's not his own business, he's on wages. Okay. So what you could typically do, it might be a little bit trickier with your husband's situation because of casual and having their own business. But when you have a trust or a family trust, you can disperse income. So say for the amount of money that you'll be making, what is it, 2,100 a day at 100 days of work. That's potentially 210,000 of income. And typically throughout the year, if you were doing more contracting jobs, it get up to be a lot more than that. And it's a lot of tax to pay income, a lot of income, to pay tax on. And in a trust, you can disperse that income. So you can be on wages, your one of your kids, especially the 18-year-old, probably not the 12-year-old because they wouldn't qualify for an early tax file number yet. But once they do, they can go on the books as a family disbursement. It goes into their own bank account, and then you can legally take that money back out of their bank account into your personal one to pay for bills, whatever. And then same would go for your partner. The only thing is because they have a casual job, they're getting tax paid for them anyway. So you wouldn't be able to deposit half your income or something, or incorporate his business income into your business income. Be a bit trickier. But that's the point of a family trust, is to offload income so that you pay on a lower tax rate for that, and so do they. In terms of claiming it, oh yes, okay. So whatever you like. Yeah. So if I see, say you're taking 10 grand out of a month, and you just classify that as just a private transfer, I'll know it's not for any kind of business expense or business bill that I need to chase you up for, and I can just put it to a drawings account, and then we can work that out at the end of the year on that. But yeah, you can take out as much as you want whenever you want, as long as there's enough money in there to take out, and as long as it's not out of the online saver account, because that's money that needs to stay there for the BAS, for the GST. Yeah. 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 Pretty much. Okay, so this is your contracting income that we're estimating on the 100 days of work, correct? So then you're going to have to pay GST on that. So this is now including GST. Yeah, so sorry. This is your base. So this is what we're going to calculate tax on. This is what we're going to calculate GST on. Now, it's actually, sorry, I should do that as 0.1 GST portion. So at a very maximum, so you have 0 expenses, you're going to have to pay 21,000 in GST. Now, there's no problem with that because what you're invoicing for is this amount, which is your money, and then you're invoicing that on top, so it's not like you're losing any money. The benefit though of doing BAS is you're going to have GST expenses. And so, say over the course of the year, you have, I don't know, you get a new computer, office supplies, you have a home office, so you can claim part of your electricity and gas bill because you need to heat. Unfortunately, I don't think you'll be able to claim any food in terms of like lunches and stuff at home, but like when you're traveling, obviously 100%. But say for the GST expenses, it comes to around, let's say 5,000, right? In GST from expenses, we would minus these two amounts. This is how I calculate the BAS, and then end BAS figure would just be that minus that, and then that's how much you'd pay for BAS over the year. Now, this is just an estimate. What we'd need to do for the meantime, though, is abolish that theory and just purely base it on the 10% that you're getting from each invoice. So say you do an invoice for 40,000 and there's $4,000 of GST you're charging on top of that. You should, as soon as you receive that 44,000, you transfer that 4,000 directly to that business online saver. Then when it comes to the BAS, I'll tell you, hey, the BAS is going to be, for the quarter, it's going to be 10,000 instead of the 12 that it would have been, because you've been saving 4,000 per month for the 3 quarters. You can then take that 2,000 out of the business online saver you want and then go spend that however you want. That's fine. But as long as there's that absolute maximum in there of those invoices, then you don't have to stress about it. Correct. And so that's what we'll work out for you now. With, so I'm going to do scenario 1, which is going to happen this year, and then scenario 2, which is going to happen the following year. Alright, so scenario 1, you're making, let's say 40,000 a month. Is that pretty accurate? Yeah. Alright, so let's say 40,000. And then the income tax on that would be, at the highest rate, would be around 35%. Right, so let me do that. Times that is 14,000 of income tax. Sorry, and then I should reclass this income tax rate. And so, after all your income and all your expenses, you should get total sums. Alright, so, your total income for the financial year would have been 400,000, and so your tax that you'd have in that account would be 140. It would marry up and you pay it, done. Now, with that, this is what I'm saying, the absolute maximum is because you'll have expenses. So we'll reduce that income tax amount. We can pay super, which can then also reduce that amount. So that's the absolute maximum. Any amount that you make in that month, you just go 35%, goes straight to a tax account, to the business online saver. Scenario 2 now is going to, plus the GST. Yes, this is in addition to that. That's why I've separated these two. So it's in addition. Scenario 2 is going to be a bit different. We're not going to be doing this anymore because the ATO will look at your income for last year and see that it was 400,000. And they'll look at your tax for the last financial year and see it was 140,000. And so they will do a thing called pay-as-you-go installments. And those pay-as-you-go installments will be divvied up for that tax amount into the 4 quarters, and so you'll pay $35,000 a quarter to the end of financial year because they're going to assume that you're going to make the same amount of money, and so you're paying towards that tax. Then when it comes to the end of financial year, say you've made an outrageous amount more money, we would obviously be tracking that enough to go, okay, it's an outrageous amount more money. We're going to be a lot more diligent in increasing the installments so that you're paying it quarterly instead of having that big bill at the end of the year. But typically what happens, say, your income's been up and down, and at the end it's down, you'll get a refund. But at the end, it's a little bit up. You might owe 30,000 more, and you're like, oh, well, I haven't really saved that. End of financial year ends in June. Right, so it's going to end June 30 of next year. Your account has till October of that year, or October 31st of that year, to lodge the return. and then you have till March 30, or I think it's March 28th now actually, March 28th of the following year to then actually have paid that amount, to have settled it. In the meantime of that, they will have adjusted for that increase in your new pay-as-you-go installments. So as this process is happening, your installments have now gone up, and it's now, let's say, to 160,000 in tax, and that will be amortized out with your new pay-as-you-go installments. Does that make sense? Yeah. So you'll never be in a massive, surplus of tax, unfortunately. You'll always be a little bit behind, but you always have enough time to catch up, and for us to kind of forecast and go, well, we're looking at this quarter and the BAS is way, way higher. Why is that? Oh, we've made more income just for this quarter. We go, okay, we'll up the pay-as-you-go installment for this one. For the next one, we'll leave it and see what happens. Next one comes along, it's less than what was average. We'll go, we're not going to touch it and make the pay-as-you-go installment less. We're going to leave it as is because we know that we're going to have to have paid that anyway. And then it offsets if there was any miscalculation for the increase before. And then when it gets to the end of financial year, it should all be tidy enough where it won't be a massive disparagement of, 100,000 or 50,000. Right? So the two things to keep in check: any income for the month, 35% to that account. Any GST for the month, 10%. That's the two figures. When you finish the contract for the 100 days, you'll probably work out to be into a new tax rate. So that 35% might change to the highest one, which is over what the normal tax bracket is, which is 37%. Yeah, but that's on wages. It's different. So with wages, you've already paid tax. Well, they've already taken the tax out for you on that. Yeah, it will be. Yeah, so it might be, but you're not taxed fully separately, but your income is declared separately. So because you're a sole trader, you're right. You will be taxed at the highest rate because you have a surplus income, but you're not going to be taxed on top of what you've already been paid for in tax. Yeah. No. So it's not. It used to be percentages per cap. They changed it maybe 2 years ago to being these brackets. So it's like 0 to 18 is nothing. 18 to 45 is like 18 cents on the dollar, between that range. Then anything 45 to 75 is 30. Then I think it's 75 to 100 is 35. No, to 120 is 35. And then they do, again on that, anything over 120, it's a set amount that they have, plus then 35 cents on the dollar. Then over another certain bracket amount, which will have changed this year, which I was about to just double check on this other screen, it will raise again. So no. Yes. So it's saying on 210,000. So this is for the 100 days. The tax will be $60,638. Which do the calculator. I'm gonna. Income is 210,000 So that works out to be 28% for that. 28.88. It's going to cover it easily, but like I said, this is accruing for this will definitely accrue for the other income that you have because it will be combined, and then also you will have the Medicare levy surcharge. Do you have private health insurance? Oh, you do? Good. Okay, so we'll kind of offset a bit of that as well. So you'll definitely be covered by putting away 35. You can put away less. So like for myself, I frustratingly and annoyingly calculate it weekly. So I know what I have weekly because the amount of work that I do in a week goes up and down so much. It's way too hard to track on a month because by the time that month's done, I haven't done my invoicing yet and I need to track it weekly. So I keep it on a spreadsheet. But if you were to be totally stress-free with it, 35% is a good figure, especially because you're going to be most likely going over that 210,000. Yeah. What was your previous income with them like on salary? Wow. Is that gross or net? Do you remember? Mm. So that would be 28.88%. Oh yes, of course, because it would only be from July to. No, that's fair. Wow. Sheesh. Yeah, I had a client who was a personal trainer. He started 2 years before COVID, and then when COVID happened, it hit him so hard to do online classes. And then I think now he just works as like a fitness teacher at like a gym, just because it's too hard to get people to do personal training, especially because everyone during COVID couldn't do that, so they did their own thing at home. They're too self-sufficient now. It's a hard industry. Oh yeah. Oh, that is. Have you ever done an F45 session? Oh, it's brutal. I've only done it ever once in my life, and I never wish to do it again. Yeah, my missus is quite fit and a gym junkie, and I I can play soccer fine. I can go snowboard for days and even weeks on end, but when it comes to working out in the gym, I just can't do it. I don't have the mental strength to do it. Oh my goodness! How old is he? If you don't mind me asking. Wow. I'm 26 and I've already got bad knees, bad back. I don't know. They get some sick enjoyment out of it. I don't know. Some people find love in it somehow. So just quickly, so I worked out for income of 400,000, the tax would be 146,000, and then the tax rate for that would be 36%. By that time, yeah. Oh, look, 35%. You're still being quite safe because 400,000 is based on the estimate of gross income, no expenses. So you know, like how often will you be flying to Perth as contracting? Yeah, so what's flights to Perth these days about? Oh, that's not bad. Yep. Okay. Yep. And then when it comes to like pay your full electricity bill through the business and gas. I don't know if you have gas. Yep. Water you can't claim, but electricity, gas you can. How many, actually, work it out. How many bedrooms do you have at your house? How many lounge rooms? Do you have a rumpus room or kids room or anything like that? Okay. So probably be 25% that we could claim for home office. I'll review that with the accountant just to double check, but I think 25% should be fine. If anything, he might want to knock it down to 20 to be safer. But you'll be working full time for the next 100 days at home, and it's not like you have to go out to site. And then when you do, you're flying. It's completely different, so it should be fine. And then what other, like your phone? You can change your phone plan. Actually, are you on a family plan? You have a separate one for you. Pay it from. Is that a dog? Oh, what is it? Is it a Labrador? Oh, cute. How old are they? Oh, you got a cat as well. What's your cat? Do you know what breed it is? Oh, why fake? Okay, sure. Oh, she's a mix of something else in there as well. Oh my goodness. Hello. What's his name? Curty. Oh, Teddy. Hi, Teddy. Oh, he's so cute. No, that's fine. Yeah, yeah, one of my friends has a Groodle, and if they leave their bedroom door open, all the socks are out of the sock drawer. I don't know. It's funny. Okay. Yeah, so that should be a good enough adaptation for your income and GST now. Yeah. So when it does come through, even if you want to double check figures with me, that's fine. If you want to email, text, whatever's easier for you, I'll be happy to double check it through the first time. So you can. I'm happy for you to work it out fully for yourself first, and go, hey, I've done this. What do you think? And then I can review and go, give you a thumbs up, or oh, hey, maybe this needs to be changed or whatever. But that should be fine. But everything made sense with invoicing. Yeah. Okay, cool. I think I got rid of it. Yeah, that's voided. Nothing here. Should be good to go. I don't think there was anything else I'd bring up in Xero. I might stop the recording now.